We are living in a digital era where we use electronic devices very commonly. The backbone of these devices is microprocessors, and Qualcomm is a leading provider of microprocessors, which are the brain of electronic devices, ranging from smartphones to cars. Qualcomm Snapdragon processors are widely used in smartphones and are known for their power, speed, and efficiency. The company's strong reputation for producing high-quality microprocessors, combined with its investment in research and development, position it well to capitalize on the growing demand for powerful and efficient microprocessors in a variety of industries. Qualcomm became the leading supplier of cellular technology in the world. In the financial year 2022, the reported revenue of the company was $44.2 billion, which has 32% increase from earlier year. Its net income is $12.9 billion, which had a 17.5% increase from last year, which was $9 billion due to higher revenue and lower operating expenses. Qualcomm's stock price has likewise performed greatly, with the current stock price of $120. 12-month price forecasts for Qualcomm Inc. have a median target of 150, with a high estimate of 170 and a low estimate of 125. The median estimate represents a 20% increase from the last price of 120. That's good for buying today, since it will keep on increasing rapidly in the future. The forecasted revenue for 2024 is $43 billion and 2025 is $44 billion. Qualcomm's business model generates a reliable source of income, with Q1 2022 detailing an EPS of $2.01, up from $1.55 the earlier year. Its solid position in the 5G market, ability to maintain major strengths, and interest in innovative work have contributed to its profit growth. The revenue growth rate is 6.6%, EPS growth rate is 8.5%, and the earnings growth rate is expected to 7.2% for next year. Qualcomm's stock costs have encountered changes throughout the long term, yet have commonly seen a vertical pattern. In the beyond 5 years, the stock has had a low of around $50 per share and a high of around $170 per share. As of April 2023, the stock is exchanging at around $120 per share. Qualcomm's current market capitalization is around $137 billion, with a price-to-earnings ratio of 14, which is lower than the industry average of 20.2. The company's price-to-sales ratio is around 2.87. This suggests that the market is valuing Qualcomm's earnings and revenue potential at a discount compared to the industry average. The firm's solid position in the 5G market, continuous interest in innovative work, and strong monetary performance have contributed to its growth. The stock's cost, however, has also been affected by outside factors, such as changes to the administration climate and legal challenges. Qualcomm is benefiting from the proliferation of 5G networks as one of its major growth drivers. Another major driver of revenue growth for Qualcomm is the increasing adoption of artificial intelligence and the Internet of Things. These technologies require powerful and efficient microprocessors to process the massive amounts of data that they generate. Qualcomm Snapdragon processors are designed to handle AI and machine learning tasks, making them well-suited for a range of applications, from autonomous vehicles to smart homes. In addition, Qualcomm's acquisition of Nuvia, a startup that specializes in high-performance CPUs, positions the company to further expand its capabilities in AI and Internet of Things applications. NVIDIA, AMD, and Qualcomm are all leading semiconductor companies that specialize in different areas of the tech industry. While NVIDIA and AMD are primarily focused on the design and manufacturing of graphics processing units, commonly known as GPUs and central processing units, that is CPUs for gaming and personal computing, Qualcomm is focused on designing and manufacturing microprocessors for mobile devices and wireless technology. When it comes to market share, NVIDIA dominates the gaming GPU market with over 70% market share, while AMD is the primary competitor in this space with a 29% share. In the CPU market, AMD has been gaining ground on Intel with its Ryzen line, but Intel still holds a dominant market share of over 80%. In the mobile microprocessor market, Qualcomm holds a significant share with over 40% market share, with competitors like Samsung and MediaTek trailing behind. Qualcomm's diversified business model also provides a strong foundation for continued profitability. In addition to its microprocessor business, the company generates significant revenue from its licensing business, which includes patents for wireless technologies used in smartphones and other devices. The big companies which are partners in this domain are Samsung, Apple, Huawei, Microsoft, and Lenovo. These partnerships enable Qualcomm to leverage its expertise in wireless technologies and patents to drive innovation and growth in the smartphone and other connected device markets. This provides a steady stream of income to $10.9 billion that is less susceptible to the ups and downs of the hardware market. Additionally, Qualcomm has been expanding into new markets such as automotive, Internet of Things, and data centers, which have significant potential for growth in the coming years. As per a report by Seeking Alpha, analysts anticipate that Qualcomm should keep on profiting from the 5G update cycle in 2023, as the expected revenue is $38 billion per year. For the last quarter, the earning per share is 2.17 with the sale of $9.1 billion. It is anticipated that Qualcomm's 5G-related income could develop to $20 billion by 2023. In the end, we will say Qualcomm is a company which deserves to be part of every investor's portfolio with strong profitability in the future. Conservative investors can wait for a broader market correction to start buying it around $100. Others can use the strategy of dollar cost averaging to buy small chunks every month. Investors can also sell put options with strike 100 in expiry longer than 6 months to benefit from premium and assignment in the event of a market drop. Thanks for watching.